Well, hello everyone. We're back for episode 3, right?
Yep,
Yeah,
episode
for
3.
3. We're going to talk about S corporations today. There's a lot of misinformation about S corporations on there. Everyone on TikTok and Instagram is just slamming it down people's throat. Got to be an S corp. That's the only way you're not going to pay taxes.
Yes, and we often run into a lot of accountants as well, and professionals that push S corps kind of down small businesses' throats, whether without really vetting whether they really should be or shouldn't be. So we're going to get into, this thing there. People think that S corps are for everybody.
The one size fits all.
One size.
Said.
That's it was on the tip of my tongue this morning. More caffeine. Anyway, so we're going to talk about S corps this morning, and the whole grand scheme of talking about different types of entity structures and stuff, and we'll try and compare and contrast them a little bit to some of the ones that we've talked about in the past, like sole proprietors and partnerships.
And then at the end, we're going to kind of round things out like we always do, debunking the common myths, all the TikTok trends, what you should not be doing. So we're going to hit on those because those are our favorite part of the episodes.
Yes, that's great. Let's delve into it.
Yeah. So tell me, everyone talks about what's an S corp. What are the differences? LLC, S corp, partnership. But let's talk about
what's an S corp? That's always a good one, because what people fail to understand is it all starts with the initial entity structure, which is an LLC.
Yeah.
A sole proprietor, a partnership, an S corp.
Mm-hmm.
And next week, we'll talk more about corporations.
Yes.
And even LLCs can be corporations or taxed as a corporation. They fail to understand that they don't become an S corp. An S corp is not a structure that you can set up. It's actually just a tax election. Mm-hmm. So you're actually formalizing an LLC, which could be a single member, multi-member.
Yep.
LLC.
Always will be an LLC.
But you may choose to take a tax election to have your LLC taxed as an S corporation. And it's kind of interesting because I kind of quizzed a few business holders way back when if they knew what the S stood for, an S corporation, and I don't think anybody I asked knew what it meant. It's just they thought it was a section of the code or something like that, and it actually stands for small business corporation.
Yeah.
So that's what we're talking about when we're talking about S corporation. So it is actually a tax election that you have to take with the IRS after your LLC is formed to request to be taxed as an S corporation.
Okay. Can you choose to take the S corp election at any point in your LLC? Do you have to do it right away?
So there are some timing challenges with S corps. Mm-hmm. You have typically 2 months and 15 days from the beginning of the year to actually make that election effective for that year. Of course, there are late election clauses where you can take late elections if you're in certain types of compliance where you have been meeting all the requirements of an S corp. You just failed to timely take the elections. There is some relief for late elections.
More like, please help me.
Yeah, it's a begging and it's not a guarantee. So, and it does take them quite a long time to respond to those. So we do try and urge people to take them in a timely fashion. Although I think I think that the IRS has been pretty graceful in late elections. Maybe not as much in the past year or so, but we haven't had too much trouble getting late elections through.
How do you file the forms? Are they online? Can you just submit it like you do your Taco Bell order in the app?
There's no app for that. However, it can be. It's not a difficult process to say, but it's all about understanding what the compliance is and what the questions you're answering on these forms. So there is a form that needs to be completed called Form 2553. You can look that up if you would like, but it's a fairly short form. But what makes it more difficult, especially if you're making a late election, if you make a late election, I almost always say get professional help because they know exactly the verbiage and the reasons that can be used and often accepted by the IRS if it is going to be late. Otherwise, you've got a really good chance of being turned down. Other than that, it is just basically like a request form that you would complete to request that the IRS accept you as an S corp. But if you're not familiar with the terminology or some of the compliance requirements, I always suggest that you consult a professional, because you don't want to go into that lightly, because I think there's a lot of misunderstanding out there that people take this election because it's some type of enormous way to avoid taxes, and we're
Yeah.
going to talk some more about that, but that's not actually the case.
Yeah, I think more times than not, we have a lot of people who come to us with, tax returns, needing accounting help, one time like off projects thing. And they're like, yeah, I'm an S Corp. And I was like, well, what are all, like, we're missing on all these things that are required for them to, as their responsibilities, and they're missing out. Do you want to touch on what those are?
Yeah, well, I'm going to back up a little bit because I want to talk about one thing I missed is when you're filling out that form, they're actually taking an S Corp election does have restrictions too.
Yeah.
Not everybody can qualify, not every LLC can qualify to be an S corporation.
True.
Some basic eligibility requirements are that you must be a US citizen.
Yep.
You must have less than 100 shareholders or members of the LLC.
Right.
You can only have one class of stock. So trying to get creative with how you have them bring investors and stuff in is not
An
something,
option.
not an option.
Yep.
The shareholders must be individuals.
Mm-hmm.
Individual trusts are okay as well, but no businesses. So you can't have a partnership be an owner of
An S Corp.
an S corp, or a corporation be an owner of an S corp. It is just individuals. So you do have to have some eligibility requirements to even get to the point where you can elect those things. So there are people out there that have asked, and know they've asked me, I want to do this, but they're not eligible. Usually, one I run into in a lot is there's a foreign person or a foreign member.
Correct. Yeah.
Something like
check,
that.
They don't check the boxes.
They don't
to
check all
take
those boxes. So just wanted to put that out there because it's not it. That's why it's not one size fits all, right?
Yeah. Right. So jumping back in. So tell us, what are the requirements once you have elected to be an S Corp? Everything's in place. They're like, yep, you're accepted, which all that paperwork gets sent in the mail. I know people are like, oh, right away, it's accepted, but you do have to wait for the election to be approved by the IRS, and they send everything by the mail.
Yes, takes a little bit of time.
Yeah.
For sure.
So let's touch on those. What are the requirements that you're bound to once you take that election?
Once you take that election, the biggest one that we get is that you must take a payroll. The owner must take a payroll. And by payroll, we don't mean transfer $10,000 from your business account to your personal, like you might do in a single member or sole proprietorship or a partnership, where they take what's called draws. There's no such thing as a draw in an S Corp. The owner must take a salary for the services that they provide to the company. So if their primary role is sales and administration, then they should be getting paid for that role that they serve in their company. And then basically from there, it's just, you have to take a W-2 paycheck. It's just, that's the crux of it. We'll get into more details, I think, later about like defining how much you can take and what you can't take and why you would take it. And I think, when we start talking about tax treatments of S corporations and how they're different, I think in most subtle ways, they're not that different. They're pass through taxation, just like sole proprietors and partnerships. They don't have any double taxation that we see with regular corporations, because I know that corporation, S corporation, the word there scares people, thinking, oh my God, it's a corporation. I don't want to be double taxed. So it doesn't have that. But it's the self-employment side is where we start, the tax side is where we start to realize the differences in S corps. And I guess why we see them overused so much is because what the S corp election allows us to do, and I'm going to put this in simple terms, not
basic,
not the terms the way you may read them online that confuse people. But what I could tell people is, like, if you have an S corp and you're working in it, then you can pay yourself a salary, or you have to pay yourself a salary for the job that you perform. But that job you perform, I mean, if I have 20 employees and all these other things, isn't necessarily the reason you make whatever profit you make in the business.
Correct. Right.
So it in a way, it allows us to divide the profits and income from the company into what you reasonably work for, your wages, which everybody knows we pay self-employment tax or Medicare Social Security tax on our paychecks.
Right.
And you would have to do that through your company as well.
Right.
That's why you would get a W-2, so payroll services become imminent. But what it allows us to bypass is that the rest of that profit, it could be another 100 grand, 200 grand, whatever, on top of our salary, is not subject to the same type of taxation rules. it's treated as a dividend or a
Mhm.
distribution, as the in contrast to a draw, which is not subject to self-employment tax. It's only subject to income tax,
Right.
which is why the S corp has become so wildly popular, but so has its misuse,
Right.
because a lot of people are not complying
Or
with
playing the
the
game.
intent.
Yeah.
Yes.
Right.
And then it becomes a tool for the wonderful tax evasion,
Right.
and there's a lot of crackdown going now on the IRS on
Yeah.
S
Especially this
corporations.
year.
It's the big
Yeah.
target for this year, or probably the next couple of years,
Yeah.
is S corporations. So it's really important to make sure that you understand where it's useful and where it's not, so that you're not. I have people that were put in S corporations. They make very little profit,
Hmm.
and they're being forced to take a paycheck,
Right.
and they're not saving any money, and
No.
the complexities of it are not worth it.
Yeah.
I know at least 3 times already this year I've revoked S elections for
Correct.
people to have them undone,
Hmm.
because the burden of compliance was greater than any tax savings that
They were
they were
going to
going to
have.
realize. Yeah.
Right. Yeah.
So
I think a lot of people, which we've heard lately, right? A lot of people jumped into this. It was good for them to the start. It doesn't mean it's always a good, route for you. Businesses grow, they slow down and all that stuff. So, and that's where those people are like, I can't sustain paying myself this market value of what my wages should be. I don't have any money left over after I pay the wages. So is it really worth it? Right.
exactly. And
So,
that's really, I know when we do these, we look at what is the LLC's, if it's a new LLC, we try and look at forecast or where they're
right.
looking to go, especially if it's going to be a rapid ramp in revenue.
Of course. Yeah.
If it's an established LLC, we're looking at not just how much revenue it's doing, which is some portion we might recommend to an S corp just for
Right.
liability and audit risk reasons, but it's how much profit is it generating,
Correct.
that's subject to taxation. And I think that's, you could have $1 million company, and if you're making $100,000, $200,000, then
Yeah.
to be taxed, all the way up to the Social Security cap on that self-employment tax
It's a
is
doozy.
a doozy.
Yeah.
Like, that people can't comprehend how much they owe in that realm. So the S corps, we can do a cost benefit analysis, and
Hmm.
we tend to do that as far as, hey, at this point in time, if you had to do this and take this salary, how much tax savings are you going to reap from this
Right.
S corp? And and we do take into consideration some of the compliance, because payroll has costs, and
Hmm.
there's other compliance with S corps, but you want to make sure that that balance is going to be there.
Right. Yeah. And we talked to a lot of our people as well who decide to take S corps about what their future plans are, just like with any other LLC.
Hmm.
It's just because it might fit right now, but what about the following year? What if you bring on another partner, or then they must, like, can your company survive taking on another set of payroll?
And that's a good point too, because when you have multiple members of an S corp,
Hmm.
it's not like a partnership where you can have special allocations for
Hmm.
depreciation or profit or losses or capital accounts. Everything in an S corp is equitably split. So if
Yeah.
you are in business in an S corp with another individual and you happen to be 50-50,
Yep.
then each at the end of the day, each owner they have to take the same distributions.
Yep.
They have to make the same contributions.
Yep.
They have the same liability. Everything it's much more rigid
Hmm.
of a setup.
Of a
Yeah.
structure
You
for
see
sure.
it a lot. You see it a lot, but I mean, I think it's a lot more useful in your single member LLCs, unless you really go into it knowing
Yeah.
that the repercussions are kind of going to be fair.
More, yeah, exactly.
Yeah.
So, all right. Well, that touches on kind of the whole, as pass through taxation, stuff like that. They have a lot of the same elements as some of the other LLC partnerships that we talked about
Mhm.
already in our previous episodes. There's just those little nuances that the S Corps has that people are taking, well, I think for granted. Like, oh, I have to take a wage. All right, I'll pay myself $1,000 a month. Well, IRS says that just kind of doesn't cut it, right?
Well, what the IRS actually states is, and this is good point,
Yeah.
because we do get a lot of that where they're taking $12,000 a year as a salary and $150,000 in dividends and
Yeah.
distributions, which is not the intent of what S corps were created for. So people think of it as a loophole, but it's
Right.
not really a loophole, because the way the IRS positions your need to take a wage is reasonable and regular is the term they use. And I think where people get hung up is reasonable.
Yeah.
Now, while that's a very loosey-goosey term, the IRS does define reasonable in their own terms, meaning you have to have well documented what services you provide to your business. And in that regard, if you were to sit down on an audit with the IRS and they say, what do you do for your business?
Yeah.
And you give them a whole list and they know exactly what field you're in and everything, they go to their handy dandy little database and they can run salary comps for, well, if you were to not be available and you had to hire somebody to replace yourself, this is what a reasonable compensation for that service that you're providing to your company is.
Yeah, what it costs.
And that's the difference, because I don't know too many jobs anymore that pay $12,000 a year, because most of us working in our companies, we're lucky we're working 40 hours. Usually it's 60, 80 hours a week. You're putting in a lot of time. So they are getting, and that's the crackdown right now, which is really looking at reasonable compensation and S corps, because they believe that probably as much as 80% of S corp owners are not taking a reasonable wage.
Right.
And obviously to the IRS, that's tax evasion, because they could be collecting this much in taxes and they're not getting any of that Medicare and Social Security, funded in. So it is the number one thing. It's the number one problem, I think, with S corps. And
well, I think that's like the hugest thing why they started hiring all these agents, because they just skyrocketed. I feel like 2 out of every 3 people we meet, like S corp, S corp, S corp.
Yeah, they've become very popular in the last 5 years or so.
Yeah. So I bet they started hiring all these people. They're cracking down, which we'll talk about, something that they put in place this year that's going into effect for this upcoming tax season, because I think they're really going to hammer down, starting to get people in place and have the S corps used for what they were meant to be used for.
Right.
Yeah. Back for the last part of our episode, debunking the myths. This is my favorite part, because I just get to drill you.
I think we're going to reverse this next time, because, man, I feel like I do all the talking.
You're very eloquent when you talk.
Not really.
Yeah.
Not really.
I'm just a small tadpole in the tax world still.
Okay.
Yes. Gotta leave it on to the professionals. All right, so let's talk about my first myth. This is the one I hear all the time. No taxes. S corps, they have no taxes. That's always the headline when I watch those reels. And I think I get sucked into...
How to pay zero taxes, no taxes.
I get sucked into like the Instagram algorithms, because I watch it and then it just shows me more and more and more. So the headline I see all the time is electing the S corp status eliminates all taxes.
Yes. Well, I think we've established that couldn't be further from the truth.
Right.
It is still an LLC. It's still a pass-through entity for taxation purposes.
Right.
So you are going to pay taxes at the individual taxpayer level, not at the corporation level, but at our level, the shareholders.
Right.
The only difference is the type of taxes that you're going to pay. Like we talked about, how a portion of the profits that you take as a paycheck are just like working for any other company. You'll have a W-2 and you're going to pay that Medicare, Social Security,
state taxes,
yeah, state taxes, all of that, just like you would anywhere else. And then any dividends that you would take or distributions out of the business on top of that, as a distribution of profits, those are only subject to income taxes rather than the self-employment tax. So you do get quite a bit of a break there, which is why S corps are quite popular, because those dividends are taxed, at your income tax rate. So if your income tax bracket, and obviously this is going to boil down to the individual, is your effective rate's only 10 or 12%.
Yeah.
That's a big break over paying the 10 or 12% plus the 15% in Medicare and Social Security. Whereas, you could be paying as much as 30% in taxes instead of 12. So that's where the massive savings starts to appeal to people. However, the numbers need to work. So, but you do pay taxes. They are just set up a little bit differently. So understanding that helps you, plan for whether or not an S corp is going to help you or not. How much tax savings can you have? And, what am I going to pay this year in taxes?
Yeah, agreed. Yeah, and I think those are most of the situations we get into. The consults we're seeing all the time. People are just drawing money. and we see these terribly small paychecks, and I just like clench my teeth in like, oh, I'm so scared for you. I hope in your event, like, you never get audited, because we know that if they were, and they just put this out, and we're going to talk about it in a second, that if they were to find that you were, I guess, skirting the actual wages, they can go back as far as they want.
Yes.
And readjust all those draws that you've taken in excess.
Into wages, into basically subject to self-employment tax, and they can revoke your S election. So there can be quite the waterfall if you get caught with these seemingly simple loop things that you need to comply with. So, and we have seen it happen. So it does happen. It's not just a scare story. It does happen. Yeah. So it is quite important, these small basic compliance things that we talk about for S corporations, you know, so saying that we don't have to pay taxes, we do have to pay taxes. Yeah. We do have to pay some Medicare, Social Security, payroll taxes, self-employment tax, kind of the same name for same thing. So
well, while you're on there about payroll taxes, that's another one that I hear all the time, that S corps don't have to pay any payroll taxes.
Well, payroll taxes are just a fancier word for either self-employment tax, Social Security, Medicare tax, and we also hear referred to, well, as employer taxes, right? That's when, if you're on a W-2 and you work for an employer, the employer you split it, where you pay for part of it and the employer pays for part of it. So those are all payroll taxes, types of payroll taxes.
Correct.
Unfortunately, if we're going to take wages as a requirement out of our S corp, you are not going to bypass payroll taxes and the requirement to run payroll. So
absolutely,
that is absolutely untrue. Although I would say a good 50% of S corps, at least that I see, I don't know in the grand scheme of the whole nation, but that I see, a good 50% of them don't even take payroll.
Yeah. Well, I think that's probably how people get round up. Like, that's the misinformation that gets put out there. Is like, oh no, they don't pay payroll taxes because I guess they don't take payroll.
I'm the only employee. I'm too small. I don't need payroll. Yeah. But then you can't be an S corp. So
right. And that's probably how it gets all rounded about, because these people aren't paying payroll taxes because they aren't taking paychecks. So I guess it makes sense in their little roundabout head.
And that's what they do. And like Myth 4, when it talks about, I'm just going to take everything as a distribution. I don't need to take those payroll taxes. So can you do that? Can you just don't pay yourself and take everything as a distribution?
No, can't.
Why not?
Well, you know, it's not like they're going to catch me.
They're not?
No.
There's bigger fish to fry, right? I hear that all the time.
Bigger fish.
Bigger fish to fry.
That's my favorite one. People are like, there's people who make way more money than me, etc. And I'm like, yeah, but they have lawyers and lots of money to pay those lawyers.
Yeah.
We're the ones that don't have lawyers, and we're the first ones to get bills in the mail because we're just going to be the ones to instantly pay. We don't want to deal with the IRS. We just want it to go away, and we don't have the means to.
So those 87,000 agents, you know, they're not going after a lot of the big fish. They're coming after a lot of the little fish. Lots of little fish make one big fish. So we are going to be seeing more notices, more letters, more send in proof of deductions type of, you know, they're paper audits typically, more random audits, you know, and I'm already getting customers going like, I've never gotten a letter before in my life. Why am I getting them all of a sudden now? What's happened? Well, that's what's happened, is that we've expanded the IRS. We've create new focuses each year on what they're going to be focusing on, and then they go after it. And
they are determined.
It's a target. So
they are determined to increase the cash they're bringing in that may have been missed or overseen. So
if we haven't said it enough, the basic number one takeaway is if you are going to take an S corp, you want to have the profits there to justify it. Seek professional guidance. You're going to have to take a W-2 paycheck. You're going to have to take a reasonable paycheck and a regular paycheck. So if you can meet those requirements and do so in the correct manner, there's no reason you can't take advantage of all the tax perks that a S corp can afford you.
Totally.
For sure.
Yeah. So when something that we haven't talked, that we talked about a ton in the first and second.
Yeah.
Okay. In the first and second episode is the first two we talked about. LLCs, what kind of liability do they have? Partnerships, we talked about what liabilities in that. So let's talk about S corps and the liability. What kind of protection do they offer?
Well, we're going to back right up to, a lot of people like to think that it's an S corp, it's a corporation, there's unlimited liability protection, and unfortunately there is not.
Yeah.
It is in fact, a form of LLC,
Yep.
limited liability company at the end of the day. So each of its members are going to be subject to that limit of liability of their ownership portion of the entity. So it is protected, but there isn't anything out there that's foolproof. That's for sure. There's
a will, there's a way. I always tell people that. They're like, oh, well, I got good insurance this. I'm like, when there's a will, there's a way.
I think you stole that saying from me.
Really? A will, there's a way?
When there's a will, there's a way. Pretty
Sometimes
sure. I say that to her all the time.
When I take a lot of the things. What is the other saying I took from you the other day? I said it to one of the clients. I don't know. I listen to you talk a lot, so that's why.
Anyway, so yes, we do still have the liability protections of an LLC, but not unlimited protections, unfortunately.
For sure. So one of the other things on the debunking that I see on the Instagram, actually, this one of our clients sent us a YouTube video about it, that it was this guy who was talking about, here are all the things why you shouldn't be an S Corp. And that's another thing we hear is like, well, I don't want to be an S Corp. It's too complicated. I'm too small to be an S Corp. Why would it even benefit me? It's so easy right now, just being on, managing my expenses in my bank account every year. Is it too complicated?
No, it's not complicated with the right professional guidance. And by definition, S corporation, small business corporation, it is intended and designed for small entities. And it's like somewhere between doesn't mean that single member LLC sole proprietors couldn't definitely qualify to be an S corp at some point, but the rigor around it is the because you're able to save some tax dollars between the wages and the dividends and so forth, the compliance of having to take that reasonable wage is really the number one thing that you need to pay attention to. So there's other things, but that's the biggest thing, and people don't want to be bothered with that. So they think, oh, I'm just too small, I don't want to do that. But there is a good play for S corporations. Get the right help and advice,
guidance,
not just generic advice. Sit down with your actual financials, your tax returns, and see have someone look those over and analyze whether that's going to be the right next move for you. And maybe it's not this year, maybe it is next year. But just to read it online and be like, that's what I want to do because I can bypass this tax and that tax. Well, if you're not paying those taxes, there's nothing to bypass. So really important that you go into it knowing what it's going to cost, what the compliance is going to look like. And
we hear it a lot, is that a lot of our people is like, well, I don't want to be that. There's too much administrative work. I got to keep up with this, and I have to update the IRS and the state. If you have really good people and your accountants and your tax advisors behind you, those things should be the least of your worries, because you're surrounding yourself with professionals who can guide you, keep you up to date on the new rules and
absolutely
things that the IRS is pushing out, and then they can be left to run their business doing what they're good at. And I tell people that all the time. Well, I can't deal with this. It's too much. I'm like, why are you dealing with it? Like, this is not what you do. You make, model airplanes and you sell them. Why are you trying to do your own taxes? It's like me. I don't work on my own cars. I have to take them somewhere. You know what I mean?
Absolutely.
All right. Absolutely. So let's touch on the last myth.
Well, we have a couple more, I think, right? Yeah. No, like S corporations not having to file annual reports.
Oh, yes. I skipped that one. Yes.
We'll talk about that in C corporations, how there's a mandatory requirement to file annual reports. S corporations, it's not that they don't have to file annual reports. This is where my favorite "it depends" comes in. If you were set up as an LLC and elected an S corporation in, say, Arizona, where we are, we do not have a obligation for filing an annual report for LLCs. Therefore, we don't have to worry about those types of things. However, if I was in Texas or California or some of these other states where these annual reports are mandatory regardless of your formation, then there can be compliance issues in that regard for an S corporation, depending on the state that you're operating out of. So it's important to know because you don't want to run late on those either, because they're pretty
They're just,
basic
well, they're basic, and it's
administrative
just like
reports.
penalties just like load up. That's
Yeah.
what they do. It's a money grab, catch people on their heels. So okay.
But if you were a C corporation
Mm-hmm.
and then took an S corporation election, which is possible
Mm-hmm.
as well, there's two ways to get to that S election, one through an LLC, one through a corporation, then you are going to have that, always have that annual report obligation because of the C corporation.
Correct.
Yeah.
Yeah. Got it. All right. So let's talk about permanent. I don't want to be an S corp because I don't know if I'm always going to have this business. I don't want all the obligations. What if I want to do this, this, and this? Is the S corp status permanent? Can you go away
No,
from
no, no,
it?
no. S corp status is not permanent. However, it can be. I think it needs to be part of a well-planned journey of your business, starting to where it evolves and where you might need that S corp. And let me give you an example of like somebody, a high earner, working in an air conditioning company that has hired 5 people. The S corp became very beneficial to them. They took it. Well, now they're getting ready to retire and they're winding down things. And it's the compliance costs and the wages, and they're not even taking paycheck anymore. There's some issues with that, and the profits aren't there anymore. And it's at its last stages of life.
Yeah.
So we can do what's called a revocation of that S corp election. And they can default back at that point in time if they were a single member LLC to a disregarded entity, file, simplify their life as they wind things down. And that happens actually quite often, in evolution. The key to that is you can't change your mind every year.
Yeah.
You can't be an S corp today, not tomorrow, today, next year. Was once you revoke that S corp election, you can't get it back for 60 months. So you have to wait another 5 years before you could reapply. So we want to be sure before you take those away that they're there for long-term reasons.
Right. Yeah.
So it's not permanent, though. Doesn't have to be permanent.
Awesome. Well, the last myth I have, we touched on it just a tad, is can all income be taken as dividends from the S corp?
I think we nailed that one to the ground. That's absolutely not. We have to make sure that we are taking compensation out of the business as a W-2 wage. You've heard us earlier talk about a term called reasonable compensation. And I'm going to touch on it a little bit at the end of this, that this is the number one target. One of the number one targets of S corporations right now is people not taking reasonable compensation. There is a way for to go to your accountants and professionals to determine what your reasonable compensation is. We do believe in the future, maybe kind of like basis and stuff, that we may have to eventually be providing that backup documentation as part of the tax return. That's not there yet, but we see the writing on the wall that's what we're moving towards. And it is going to be a big topic of audits just going forward with all the IRS agents, is S corp compensation. And what's interesting, and because now I know our firm, we do reasonable compensation analysis. We use the same database the IRS does, their audit proof. So if we do an interview and we say, tell me about what services you provide your business. You fill out the questionnaire. We are able to, plug that data in and kick out based on, because everything's subject to inflation. Just because you paid yourself $50,000 a year 5 years ago doesn't mean that same, one, you probably don't perform the same services every year. And two, wages change. I mean, look at In-N-Out Burger, man. I mean, $20 an hour. I know where I'm going if I ever
need to retire.
I need to retire.
Register. You'll be cool.
I'll be good. So wages change. So annually, you need to do this compensation analysis every year to justify your payroll. And once you have that and you do that, if you do get one of those letters or audits for your wages and you have that documentation, you're golden. And it's not expensive to do. It's simple, and it's much better than saying, I think everybody's favorite number has been like $50,000 a year.
I know. Everyone. I'm paying myself
50.
48.
Yeah. And they just, let me guess.
Yeah. Exactly.
So those compensation audits and those analysis are going to become really important. We've been stressing them to everyone we know that comes through here with an S corp. I think we're pretty much a lot of us are pretty much on the forefront of really trying to nip that in the butt before all these letters start coming out.
Well,
So
it's always been in place. That's what
it's
people.
always been in
Yeah.
place. Hasn't been heavily enforced because there have been easier targets
To it, yeah. I
and not
agree.
enough staff. But now they're
Yeah, and I think
fixing that.
that's the biggest question we get. Well, why now? And all this stuff is
Well,
like, well, they have released all this literature, the IRS saying, this is what we're looking for. Here are the
mhm.
requirements. Let me remind you of what's been in place. And that tells us, hey, nudge, nudge, we've really been honing down, checking on it. Here's the reminder of what it's supposed to be. We're hiring all these agents, etc. And people are like, well, what if I don't want to? And I always tell people, like, in an event of an audit, what are you going to do? Right? Like, I can't help you do something that you choose not to do. I can't go back in time and fix things that weren't there.
Exactly.
So that's what we always say. Like, it's what's better safe than sorry. That's what my grandfather always said.
Or think of it like a small insurance policy.
Yeah, it's a small administrative headache of really what does it take an hour to do to make sure
depending
things
on
secure.
Yeah, but
Secure,
have their
good.
time and then the professionals' time to do the analysis.
Yeah.
Absolutely. So let's recap a little bit on S corps. Then I think some of the key ideas out of this is they can be a very useful tax election for
Totally.
lots of different types of businesses. Us ourselves, and I think statistically, I believe that they're completely overused.
Yeah.
And maybe used inappropriately by some accountants and professionals who advise them. However, with the right guidance, under the right circumstances, S corporations can be very valuable and very executed properly, save you a lot of money in taxes. That's the fact.
It's true.
So the best thing you can do for yourself if you're unsure is to seek out professional advice, ask for them to do an analysis of how much can I save, what's the differences, like really make it specific to you. What will I have to take in a paycheck, and then make an educated decision based on the path of your company, its profits, and what you're doing.
We actually didn't touch on this, and now that you say it, just popped in my mind, is that a lot of people want to be S corps all the time, but they don't take into consideration the other half of their partner, their wives, their husbands. Like, what are they doing? If you're running this small business and you want to, be an S corp, but the market for it means you got to pay $100,000 on a W-2, but your wife's cooking and she's bringing in a $300,000 W-2 from Intel. You have to weigh that benefit as well. Is it tax-wise a good idea too?
True. I mean, everyone's tax situation is different.
Yeah.
So whether you're married, in high earners, sometimes we even have people that want to be S corps and they already have a day job.
Yeah.
And then we have to weigh, okay, well, you already get a W-2 and you're paying Social Security and Medicare.
Yeah.
If we do this, is it really going to be that much of a tax savings at that point in time? And sometimes it is, and sometimes it's really not.
Yeah. I just wanted to touch on that because that happens all the time. It's like, that's why getting professional help and guidance lets you put those scenarios in their hands and then really, dive into the situation instead of being like, oh no, this is how much they said if I run $100,000 business, I need to do this. Like, it's not cut and dry.
Absolutely. And I think next week we're going to talk about C corporations.
C corps.
And we're really going to start to see the whole picture come together of the different types of entities, taxation, and so forth. And I'm hoping after that 4th episode, and we can kind of recap the comparison, maybe we can even bring in a couple of guests that
bring in some guests,
talk about their journey of
how they've evolved, gone from LLC to, partnership, LLC to S corp, even if people who have revoked their S corp elections, just kind of getting people in here to tell you how they've expanded their business or kind of rolled and, nurtured it to what it is today.
Absolutely.
Cool.
All right. Till next week, peeps.
See you then.
All right.
Bye.
Bye.